Well, let's now bring on board the management of Asian Paints. As always, Asian Paints, despite the challenging quarter that it was, has managed to deliver well on its key parameter, and that's decorative volume growth. Beating expectations through and through over there, though of course it did have a bit of a muted margin figure, but mostly it seems to be transient as per brokerages. But let's understand a bit more on the volume front and the margin front as well, with Amit Syngle, the MD and CEO of Asian Paints. Thank you so much, Mr. Syngle, for as always joining us on ET Now Post Your Numbers. And I think let's start off with that decorative volume growth figure, quite a strong one at that. Now, we're done with the second wave. Let's hope there's no third wave, of course. Do you anticipate the strong demand to continue?
Yeah, so when we look at quarter one, I think the overall volume and value numbers have been quite stellar in terms of what we have been able to achieve. What we see very clearly is that, the months of April and the months of July are something which have been good in the quarter, which has helped us in terms of getting to these numbers. And the good thing is that the story of strong, consistent growths kind of continue in a very strong manner, both from a top line and a bottom line perspective. And overall, all businesses by and large have done quite well, whether it is the India business or it's the industrial business or it is the international business. So I think all businesses have done fairly well as we kind of look at, despite the tough conditions because of the second wave, which kind of emanated in this quarter one.
You know, a large part of the strong demand has also been because of pent-up demand. Do you think that's now behind you, and now you should, a majority of your demand will only have to come in from fresh sales and fresh demand?
See, what we see very clearly is that if you look at the month of April, I think till about 15th to 20th April, the going was quite good till the time the second wave really picked up and the lockdown started happening across the country. And in May, it was absolutely closed if we see to that extent. And it is only in June that we have seen a resurgence given the fact that the country is opening up. So I see it as that there should be a lot of pent-up demand of April and May still in the system. Part of it kind of came in June, but it would still be there, which would start coming as we kind of look at quarter two and quarter three going forward.
Mr. Syngle, always hazardous to guess this at this juncture, but what is the estimate for the volume growth for the current financial year, and how do you expect to reach more than double-digit growth?
See, the way it is going, I think currently the environment is looking good from the point of view of demand conditions. And there has been good monsoons, as we see, and good monsoons really kind of fructify in terms of good agrarian growth. And therefore, we feel the rural sector really picks up. We are also seeing good inflation as far as the projects, large institutional businesses going on to that extent. And it is also a long Diwali this year. So I think all predictions would be that, it should be definitely going ahead. It should be a good double-digit numbers, definitely.
Mr. Syngle, margins got impacted in the first quarter quite evidently. Have you taken price hikes to, work on that in the current quarter?
So what we saw was at the end of Q3 itself, the inflation had started quite a bit, and there was almost about a 10% inflation at the end of Q3, which had happened. And as we kind of got into Q4 and Q1, I think the inflation only increased to levels of beyond 20% overall to that extent. We have taken price increases in the market in quarter one, and these have been to the tune of about 3.1% in terms of what we have taken for the full quarter, and we have announced some price increases for the coming quarter as well. So we believe that I think overall we will have more increases coming in the quarter, which is there to take care of some of the deficits which are coming in the gross margins. But we also expect that some softening of prices which might start happening as we kind of go ahead. So to that extent, we will take a balanced call in terms of definitely increasing more prices as we kind of go ahead, because there is a deficit of about 6 to 7% which still remains, which is there. And we will also see how the inflation really kind of tames down, and then take action accordingly in terms of the overall prices.
Sure. But Amit, do you sense that these price hikes could have an impact on your demand and thereby volumes? Or do you foresee such a scenario in the near future?
See, overall, the paint, buying elasticity, which is there, we feel that, in any month, if it is 2 to 3%, it is something which the customer takes in stride to that extent. Anything which you do beyond that starts impacting the purchasing power, and therefore people tend to kind of start downgrading in terms of products to that extent. So I think we need to be very clear that it has to be a reasonable kind of an increase which we take, which basically kind of aligns with the overall demand and does not disrupt it too much to that extent. And therefore, going forward, we think a 3.5% kind of increase is something which customers would not mind going ahead, given the overall inflation which is happening in the environment.
Amit, good to have you on the show. We'll let you go on that note. In fact, we're going to wind it up on this edition of The Market. It's a goodbye from Mubina, Alex and me.